Welcome to the Real Estate Rundown. How do you reconcile all of the news that you're getting? So Redfin just reported last week that the U.S. housing market in 2024 gained $2.5 trillion in value. But then also we have reporting coming out today that shows that the FHA has sent over 500,000 incentive payments to servicers for loans that might be in trouble. Let's talk about it.
So is this like, I don't want to say is this like misinformation, but it's almost kind of like
no, this is real.
Like a ruse. No, what I'm saying is you have Redfin saying $2.8 trillion in booming equity, right? America's way more rich, essentially, and then FHA saying that there's 52,000 homes that are in massive serious delinquency.
Well, let's read about this. So about 7% of FHA mortgages issued last year, so in 2024, went seriously delinquent.
In their first year.
What that means is 90 or more days past due when a payment is due within 12 months. So basically they didn't pay for 3 months. And that's more than the 2008 peak of the subprime bubble, which was 7.02. Right now it's 7.05, so it's like lining up right when that subprime bubble.
Okay, so couple differences between the subprime bubble and now, and one big difference is home price appreciation. Mm-hmm. So we know that in 2008, everybody was in a severely negative equity position. Mm-hmm. I would venture to say, though, that for the people that bought in the past 12 to 18 months, they're likely in a negative equity position as
especially with FHA, because
3.5%
it costs more to sell a house than 3.5%.
Absolutely. Well, not only that, a lot of times they're going to take, what is it, 0.75 of a point? Yeah, it's 0.75% that you're going to just finance into your mortgage because of the FHA fee, right? The mortgage insurance fee.
So I didn't realize this, but the article is saying under the guise of the COVID relief, the Biden administration masked the growing troubles in the housing market by paying off borrowers and mortgage servicers to prevent foreclosures. And of the 52,531 FHA loans last year that went seriously delinquent, within the first year, only nine resulted in foreclosure.
9
out of 52,000
homes out of 52,000 went into foreclosure.
So basically, they're doing what was it? What was it they used to do? The mortgage the workouts, or what do they call them? Workouts. You did the for sure.
Yes. Why am I drawing a blank on?
I don't know what they call them.
The payment plans or the
payment plans or the
Well, you had HAMP, which is
HAMP,
the mortgage relief.
So they're basically doing that right now
without really reporting or any tell of it happening. Here's something interesting. So basically what the same analyst, John Wake, was saying is that the FHA subprime could be in a bubble. And if you look at the share of borrowers with their debt to income ratio on FHA loans, it's trending really high. We're at about a 64.47% debt to income ratio on FHA loans. So the historical chart, like back in 2000, it was like a 25% debt to income ratio for FHA borrowers. And now it's at 64% debt to income ratio. So let's do the math on that. So a 64% debt to income ratio. Eliot, you're so good with numbers. What would that be if your payment on a home, if you were at $2,000 a month, and that was your monthly payment, your debt to income ratio is 64%. So if you're making how much? If you're making $5,000 a month,
your payment's going to be like $3,000 in that situation.
So your payment on debt would be
your debt to income ratio, right? You're revolving, like, so credit cards, car payments, house payment, all that's in that. You're not, the whole point of what that's supposed to do is, as we know, is that's not giving you enough money for groceries to live, all those other things,
mortgage,
which is why they have the front end ratios, back end ratios, right? Which is where a lot of times you're not supposed to exceed 55%.
So
back end ratios, which means all in.
We're trending 64% right now for FHA loans.
So if these were all foreclosures in the past year, I mean, because you said 20% of all mortgages are FHA. If they wouldn't have done this and they would just foreclose on people, there would probably, I mean, I would imagine if just of those 52,000 loans, if there was 50%, even if just 50% of them, that'd be like 26,000 foreclosures over the past year. Instead, just 9 because they keep kicking the road. Because basically what they're doing is considering a borrower who misses 4,000 monthly mortgage payments, the servicer will add $20,000 in missed payments to the mortgage and reduce the monthly payments by $1,000 to basically for 3 years. So it's adding another $36,000 onto their mortgage. And so now the borrower is $56,000 deeper into debt, though they don't add any interest onto that. But if he misses the payment again, they just do it again.
Yeah, that's what I'm saying. It's a bit of like almost a Ponzi scheme when you're looking at the numbers. It's like a form of actually, I don't want to say inflation, but that's kind of what I mean.
Because is it a form of artificial manipulation of the housing market?
Yeah, I think that's what it is.
So artificial manipulation of the housing market.
Yeah, and I know
they're propping it up.
We talked about this a little bit last week with the wealth effect and how the Federal Reserve in the past has come out and said one of the tools at our disposal is to inflate house prices so people think they're rich, so they go out and they spend money. Well, I saw this meme and it's a guy and he's holding up a little kid who's like basically making a basketball shot, and the kid says text over the kid says morons thinking they're real estate geniuses because the kid's like dunking the shot, and the guy holding the kid up, they have text over it that says the Federal Reserve manipulating asset prices. So we'll flash this up on the screen, but when you hear things like this, and I know that FHA and the Federal Reserve are separate, they're not together. What did Chris call it? You made some comment about like a different hat or same house, different hat. They're not the same. We get that. However, it's really interesting. And could we be in for a little bit of trouble? I think the hard thing is like, how do you reconcile it against all of this positive news that comes out about the housing market, about like how there's $2.5 trillion in equity added to the kitty? Like,
it's a manipulation, right? Yeah. Right. Well, I mean, everything's energy, right? Flow, like the ocean flows in, flows out, right? And so if they can control the energy and make the greater population think that everything is hunky-dory, keep spending, especially we just came out of a lot of this is, I mean, I realize it's a little bit post-election cycle, but we're still riding the waves of some of that last work being done where it was maybe artificial manipulation. And I don't know, are these the things that will continue to flush out with what is being found now by Mr. Musk?
I don't think we're fooling people. If you look at the listing count, Fortune did an article about this and they analyzed the delisting, so canceled, expireds. And what they found is that 64% of homes have been delisted. It is the highest level in nearly a decade. If you go to Google Trends and you search sell house, what you're going to see is that it is at an all-time high. So more sellers are Googling selling their house than ever before. And then also we have some climate change information that is pretty shocking. So the Fed Chair Jerome Powell was giving testimony on to the Senate Banking Committee. And what he said is that in about 10 to 15 years, we could see a mortgage desert is what I'm calling it. He said we could see entire places in the country that are impacted by climate change, such as Florida, California, Texas, Georgia, where you cannot get a mortgage because insurance companies will not give you homeowners insurance.
Which is really, really scary to think, like when you're talking about California.
But California, Florida, that wasn't climate change. That was like fire. They didn't have water.
Disaster-prone areas.
They weren't cleaning.
Jerome Powell termed it disaster-prone areas.
Gotcha.
But it's going to feed into
like
the
hurricanes,
unaffordability.
fires. Yeah.
Unaffordability. And if you can imagine what would happen if all of a sudden you couldn't get a loan in Miami, Florida? What would that do to home prices in,
It would devastate.
Absolutely decimate
80% of all houses, give or take, depending on the year, are purchased with a loan.
Well, they're giving, like Florida is giving their own insurance. They have like state insurance that covers for hurricanes, right? They will cover over their other policy or something.
Right, but so we know someone who owned a house in Florida and was impacted by the hurricanes, and she was telling us that it's a joke. It was a negligible amount of money. It nowhere covered their damage. In fact, they sold their house.
Yeah.
Because they were so...
They cut bait.
Yeah. They were like, we're done. We're out. We can't handle this anymore. Their house flooded 3 times.
Yeah.
they're like, we're done.
Second debit. Well, you're right.
And
Three times.
that state insurance was a joke. Now, meanwhile, I think this could help Florida. Is Governor DeSantis yesterday came out with a proposal on how to eliminate property taxes in Florida. So he gave this. Did you guys see that?
I did see that.
Yeah. So he gave this like really long press conference, and he was talking about how, hey, essentially you own your house and you pay, like, just because you own the house and now you have to pay taxes on it like year over year over year. And
yeah, there are some people that have their payment is like just as high as their tax payment every month.
Oh gosh, yes, especially like in New Jersey, New York, yeah, they I think
even in
they have more
Florida.
Foreclosures, tax foreclosures than they have mortgage foreclosures.
Yeah,
in a lot of those states.
So should there be more regulation on insurance companies? So that was one of the things that Jerome Powell said, is that, the Federal Reserve doesn't regulate insurance companies. Was he making a case that maybe they should? Because, we know that there have been some serious incidents lately where they've just cut people off. They're unwilling to insure. We've had properties in certain markets where the end buyer wasn't able to get insurance, and that severely impacted the sale. So should there be regulation on insurance companies?
Well, when we say regulation, what do you mean? Because I think, like, you have an insurance company that, I mean, they have a big pool of money from all the insurance payments, right? And then they pay out claims. But do they segment, like, hey, Florida, here's a Florida pot of money that goes out, or do they do it like throughout the whole United States? Like, does some of my premium go to a claim in California? Because I thought I read something about in California, the government was basically saying, hey, we won't allow you to increase premiums. Like, premiums can only increase this much, every year.
Percent, yeah.
And so then that's why some of the insurance companies basically said, well, we're not going to insure anymore because we can't do that. If we can't increase the premiums to where we need to increase them to because there's risk, then we're not gonna insure them. And that's why a lot of these insurance companies cut their insurance policies with all these people, because they're bumping against the government, basically saying you can't increase premiums.
So you're saying that the regulation caused them to cancel the policies because they couldn't just increase the premium?
100%, because they wanted to increase premiums on people because they saw fire danger and climate change or whatever it was, but the California government said no. You cannot do that.
Sure.
And then they
but
said,
on
okay,
the
well,
other
fine,
hand,
we're leaving.
Like, a lot of insurance companies have a lot of fat, and a lot of people at the top are making a ton of money. So the CEO of State Farm made $24 million in 2022. I just Googled that real quick. That's
24 milli.
That's a lot of coin. Now, not to say that that's a drop in the bucket when it comes to paying out insurance claims for disaster-prone areas. I get that. But I think that they've got a lot of fat. And who's making sure that they're not taking advantage of people? I mean, this has serious implications on the housing market.
Yeah,
serious implications on, like you said, housing market affordability, lifestyle, where you live. I mean, how far this rolls downhill could be ridiculously huge. I mean, you're talking about a complete dismantling of a major metropolitan if you can't get a mortgage.
Right, exactly. And there's some real estate economists that are saying that this could be the Achilles heel of the housing market is the insurance problem.
Well, and Fannie and Freddie, right, which are by far and away the biggest holder of secondary mortgages, the reality of it is if that leaves, does the government have to step in?
What do you mean if that leaves?
Like, meaning that they won't.
If the insurance won't insure? No, they won't, because they didn't. Right? I mean, there are tons of people in California that lost their house that didn't have insurance. Mm-hmm. So the government didn't step up going like, oh, they left and they canceled your policy. We'll step in here and insure your property. No, they didn't say that. I think they did a little bit.
As I say, and that's just, this is on what we're talking about. This is a minimal scale.
It was nothing,
Imagine if it was a mass scale like we're talking about, like in general. Fannie, Freddie, everybody says, and insurances, right? Because they're not going to give you a mortgage if you can't get insurance. So now what the hell do you do?
You got to move to Arizona. You got to move somewhere where the insurance is small. So that's also going to make prices go up in places where they don't have, like Arizona, like where we have a monsoon it rains and maybe knocks down your
Well,
patio equipment in the pool or something like that.
Well, you lived in Germany, like Turkey, Germany, right? Where the government aren't they like the main people that lend out money in like Germany? Is the government?
I lived there, but I didn't get a loan there or anything like that.
Well, somebody can maybe tell me in the comments. I'm sure one of our viewers knows, but I if I'm not mistaken, like the government in a lot of those places are actually the ones that give the loans, and it makes it so it's ridiculously hard to get in. They control everything, and it's just, again, further manipulation.
But if you look at our housing market,
conspiracy, but
like, let's be real, like the government's behind it all. I mean, Fannie Mae and Freddie Mac are still both government sponsored.
They are definitely
entities,
too big to fail.
Which, there's talk of them privatizing or going back public.
Going back, yes.
Right. So that could be really interesting too. A lot's happening in housing, and we did get some relief on the 10-year treasury because the yield went down a little bit. What's it tracking right now?
I like a 4.2 or something like that. Yeah.
Okay.
I mean, it's still high, but
it's still really high. It's still in the 4.
Yeah, if we can get down to 3s, maybe it might move the interest rates some.
We have seen interest rates come down a little, but by and large, buyers are rejecting sellers' prices. And we had a comment on one of our videos that we had posted on our Zoodealio YouTube channel here, and it was from Carter. And Carter said that there are so many $450,000 to $500,000 homes that should be listed in the $380,000 to $415,000 range, but realtors are pushing maximum prices. Homes are sitting and then selling after 20% price reductions.
Is that realtors or is that homeowners trying to maximize
the homeowners,
their greatest asset?
yeah.
Exactly. A realtor is going to go in.
If I'm a realtor, I want to get a lower price.
Right? Yeah. A realtor is going to look at the local market data. Hey, what are similar homes selling for in your area, and what prices are they currently fetching in the current state of the market, right? That's just, we all know, a comparative market analysis. And so they're operating off of that. I'm not going to blame it on realtors. This is them operating on the market, and we all know the homeowner wants to get the most for their house as they possibly could. Let's face it, you don't buy something and be like, yeah, my house isn't worth $300,000 and I'm just going to go ahead and sell it for $100,000. Yeah, that's what I'm going to do today.
You've definitely honed in on the realtor bit in that comment, but I think the takeaway is that sellers are listing for higher prices than the homes are actually selling for, or
they're worth. And maybe this FHA thing, I mean, that's really telling.
Absolutely could be falsifying.
Maybe, they think
that'd be
that
inventory.
Hey, there's not a lot of inventory on the market right now. Well, maybe because they're stacking, all these late payments on top of all these other loans. These people can't afford these properties, and it's eventually going to blow up in their face. But I mean,
I think that if you have an FHA loan and you get wind that this could be you could just like not make your payment for 3 months, and then you could get $1,000 off your mortgage payment. Like, to me, that sends the wrong message.
Get mad at us for uncovering this.
Yeah,
I think that's why they're not. A whole bunch of people stop making their mortgage payment.
Yes. I mean, it's definitely troubling, and then it infuriates me for the individuals that want to get into the housing market that can't. And then you have, despite, and here's the thing too, like over the past like 4 decades, there's been billions of dollars spent by the FHA to promote homeownership and to increase the percentage of homeownership, yet it's relatively flatlined. Like, there's not been an increase really. So
I mean, this is probably some waste, fraud, and abuse going on here too. So the FHA made 556,841 incentive payments to prevent foreclosures, and this is a cash cow for these servicers. And they're able to do rinse and repeats where they do it again, and then the FHA also lets servicers charge borrowers legal fees, typically thousands of dollars, they're basically adding them to the mortgage principal.
Well, and exactly. So they're eating up their equity,
and so
right? So when they go to resell, they're still collecting. It's just delayed gratification, and which is artificially inflating pricing, which is all of the other things, right? Think about it. You go to go sell your house now, instead of, hey, I'll price my house to sell, or am I going to try to reach a little bit to pay for some of these costs?
And we were talking about this before the show, but I think there was, we're talking about, we closed on a few properties that we saw like 2 FHA loans, or one from FHA and one being paid off on HUD. And I mean, just thinking, when I was thinking about that, I was thinking, why do they have another one?
I thought it was COVID relief.
Yeah, COVID relief, or
that's what I was. Yeah, when I see that, that's what I think.
But I mean, obviously, this might be some of it.
a lot going on.
Suspicious.
What do you guys think? We think it's a little sus. And
there's a lot. I mean, and like, there's this melting down right now. We got, I think the markets in general are melting down. I mean, it's probably a little, hopefully short term, but the new tariffs and everything that's out. I know we all love crypto. It definitely has not responded well to the tariffs being pushed and holding their position. So, and it's an interesting time. I think there may be rockier waters before there's smooth waters.
Yeah. So last week we went over the stats and how in 2020 home prices went up by 42%. And I think that the velocity that things went up could also be the velocity that things go down. And
it's the rubber band effect.
The market just moves faster now with electronic signatures and real-time pricing and all of that. I think it just moves a lot faster. And so if sellers that really have to sell, like I said, go on Google Trends and look for yourself. The term sell house is at an all-time high. It is tracking at an all-time high. More people are Googling selling their house than ever before. And you know what else they Google? They Google sell my house fast, sell my house for cash, sell my house to Open Door, sell my house to Zillow. They're looking for cash offers on their home. So I'm just going to plug us because that is what we give realtors, is a platform with cash offers and options for all of your homes, all of your listings, all of your prospects. Check it out. And thank you so much for tuning in. If you got value out of today's episode, be sure to hit that like button and subscribe to our channel. We'd love to have you be a part of us on the reg. Thanks so much.